name's Moriah Thomas Parker. I'm a Senior Associate of Portfolio Management and Investor Relations at FCP, headquartered in Chevy Chase, Maryland. FCP is a privately held real estate investment firm investing in over $7 billion of assets since our founding in 1999. The firm focuses on residential and commercial investments, investing directly and with operating partners. I would like to discuss today the portfolio composition and defensive strategies in an uncertain market. Over the last several years within the real estate industry, we have speculated on where we are in the market. One of the effects of analyzing the markets are rising interest rates. We at FCP believe that the best hedge against rising interest rates are to have sustainable, durable cash flow. When understanding how to position your portfolio for the current market, it is important to take away 3 key takeaways. Number 1, you should have a balanced investment approach. Number 2, manager selection. Number 3, understanding the effects of ESG, the environmental, social, and governance effects currently impacting the real estate industry. So on point 1, a balanced investment approach. As I mentioned before, durable defensive cash flow is very key when considering a diversified portfolio. At FCP, we believe that the durable cash flow comes from a very specific sector: moderate income multifamily housing. Moderate income multifamily housing can differ as you look at various markets. However, typically it's defined as 30 to 80% of area median income. Due to the lack of supply within this particular sector, we believe it is a defensive strategy given the lack of supply as well as the quality of the durability of the cash flow. While that is about 50 to 70% of a portfolio, it's important to have the alpha generators. The way that we have accessed this is through our commercial and our Class A very select investments. On the commercial side, adaptive reuse creative office also provides a very high generating alpha return, but at the same time it meets the needs for durability of cash flow. In addition, Class A, we believe, should be done on a selective basis, and market selection is very key in identifying the storied assets that provide that alpha generating cash flow. Moving to my second point is manager selection. Often in strategies like moderate income multifamily, there has been a lot of institutional capital that has moved into the space. But what's really important is the owner-operator approach. The ability to operate and own these assets goes all the way down to the asset level and construction level execution. It's very important that you understand the capital needs to reposition and drive the cash flow at the asset level in order to extract the best value out of moderate income investments. On the commercial side, I mentioned the adaptive reuse. Again, at the execution level, it's very important to understand the level of expertise needed to effectively reposition those assets. Lastly, I want to talk about ESG. ESG has been something that often has been a check the box within our industry. However, with firms that have been around for over 20 years, like our firm, ESG has been built into the DNA of the firm. Some components of ESG is understanding not just the environmental effects, but also the social and governance. On the E side, there are many environmental effects that are impacting our industry. It's important to understand that some strategies are sustainable in and of themselves. For example, take moderate income or adaptive reuse. You are using existing assets where you're able to reposition and recreate to drive value. Moderate income multifamily housing addresses a very important social need: the availability of affordable housing for moderate income renters, which is the largest cohort of the population. Without the presence of government subsidies, it's very difficult to build new moderate income multifamily housing. Therefore, the existing stock has to be repurposed and reused to provide a clean, safe environment for affordable housing tenants. When looking at ESG overall, it's important to recognize managers who have ESG principles ingrained in their DNA. For example, FCP has a senior level executive dedicated to the sustainability and strategic efforts to address our social, governance, and environmental needs within our FCP platform. Finally, as 3 key takeaways, within this environment, it's important to remember the 3 key things: a balanced investment approach with the focus on durable, sustainable cash flow. Second, manager selection. ensuring that the strategies that fund managers are implementing, they have a level of expertise and the ability to execute at the asset level to drive NOI and extract the full value of the investment. Lastly, ESG principles are very important in understanding where we are in the industry and where we are in the market. Ensuring that you are taking care of the true principles of ESG is equally important in understanding how to balance and determine the composition of your portfolio going forward for cycles to come.